Hey everybody, I wanted to make a video about credit score and just so everybody can see the basics of it, get to know it a little bit. We're not going to cover everything because there's a lot of different things that can affect it, but we're just going to go through a little bit. So what it's going to be is what exactly is a credit score, how your credit score can go up, how it can go down, just be affected by different things, and what you can use your credit score for. So what a credit score is pretty much a number that tells lenders your credit behavior, how well you pay back a loan on time. You got a higher credit score, and they're going to be more comfortable with getting you a loan because they will feel confident that you will be able to pay it back. A lower credit score, they're going to be more hesitant to lend you out money because you might not be able to pay it back on time or in full. Now, the average credit score in the United States in 2023 was 715, which surprisingly, I think is pretty decent. I've always grown up thinking that a average credit score was between like 6 and 700. Now, if you have a credit score between 5 and 600 in the low 500s, it that's a pretty low credit score, and you're probably going to run into some issues trying to get loans for different things. Now, if you have a high credit score above the average, like say 760, 770, 780 plus, congratulations, you're doing a great job. That's going to give you benefits that you wouldn't have otherwise gotten. Now, things that will impact your credit score, kind of the basic one that most people are going to know about is paying your bills on time. You don't pay your bills on time, it's going to affect your credit score. And also vice versa. You do pay your bills on time, your credit score is going to go up. But you got to remember, it's not just going to go up and up into infinity. There's a cap on this. Another factor is your unpaid debt. Now, this includes your card payments, any student loans, credit cards, pretty much anything that you have to pay back. That amount is going to affect your credit score as well. Your mortgage is also going to affect your credit score in the short term as far as going down. Consistently paying off your mortgage in the long term will help it increase. Another thing is your credit utilization. So by utilization, I mean how much credit have you used on your card compared to your overall max limit. Let's say you have a credit card that has $10,000 max limit on it. You have used $5,000 of that $10,000, so you have a credit utilization of that card of 50%. Now, 50% is quite high. Once your credit utilization gets above 30% is kind of where it's going to start negatively affect your credit score. If you can keep it below 30%, that's where it's going to help you get into the green, get into higher numbers, and that's where you're going to want to keep it. This might seem pretty obvious, but it's something that affects your score. If you have any debt that has gone to collections, that's going to be a big hit on your credit score as well. Getting a house foreclosed is going to hurt, and obviously if you've ever declared bankruptcy, that's going to completely destroy your credit. There are many different things that go into a credit score and things that affect it, but as a rule of thumb, pay off your bills on time. Don't open a zillion credit card accounts. Keep your utilization below 30%, and on average, you're probably going to hit the national average on your credit score. You're going to do pretty well over the long term. So why do we care about a credit score? A lot of people always talk about, hey, I'm going to start using my credit card and just paying off things randomly to increase your credit score. What's it all for? Like, what's the point of having it? What can I benefit from having a high credit score? Well, a huge reason is when you have a high credit score, it's going to help you when you purchase a home. A higher credit score is going to make the bank feel better about lending you a large amount of money and you being able to pay it back. And is also going to help you with getting a potentially lower interest rate on that mortgage loan. Recently, the housing market has had very, very high mortgage interest rates. So, any and all help that you can get lowering your rates is, only going to be a boon. Besides a house, you can also use a higher credit score for lower interest rates on your credit cards, or a lower interest rate on a car loan or car insurance. Another thing it could help you do is get a higher credit limit on those credit cards. You shouldn't be maxing out your credit cards in the first place, but if something were to really happen and you had an emergency and you needed to put a lot of money on a credit card, having that higher limit is definitely going to help you. Those are some basic reasons on why having a good credit score can help us out, and some tips on lowering it if you need to. Now, if you want to talk in the comments, give me some ideas on what you think are some better ways to improve your credit score, and I'm interested to know how credit score has impacted your life, good or bad. Thanks for listening, guys. Don't forget to like and subscribe.